Yesterday, President Donald Trump proclaimed April 2nd as Liberation Day and did unveil a series of unprecedented, massive tariffs that sent the stock markets and cryptocurrencies into a bit of a tailspin, to be honest. The new policy is imposing a universal 10% tariff on all imports effective April 5th, with substantially higher reciprocal tariffs targeting specific nations. China faces a total tariff rate of 54%. European Union and Japan are subject to tariffs of 20 and 24% respectively. And these increased rates are scheduled to be effective from April 9th. So, what did the administration do to come up with those numbers? And there's been an article in the Financial Times that said there is some method to this madness because they call them quote unquote reciprocal tariffs, which would imply that this is exactly the tariff that the other country, for example, Switzerland or Vietnam, had imposed on the US, but that is not the case. They came up with a specific formula, which the Financial Times had reported on. So, first step is you assess the trade deficit. Basically, you determine the US goods trade deficit with a particular country. That means, is that country exporting more to the US? Is it importing more from the US? And the trade deficit exists from the US's perspective. If there's more exports happening from the other country than the US are exporting to that specific country, then you divide the trade deficit by the total of US imports from that country and obtain a percentage. You halve this percentage to set the tariff rate. If we look at an example for that, for example, Bangladesh, US imported $8.4 billion of goods from Bangladesh in 2024, giving it a $6.2 billion trade deficit in the country. That is 6.2 divided by 8.4, and that is 74% divided by half. And you come up with the tariffs that have been charged for this particular country. And this very abrupt nature of this announcement, plus the intensity of the tariffs, has led to significant volatility in global markets. In Asia, Japan's Nikkei 125 index is down 3%, Hong Kong index down 1.5%. European markets, in particular Germany, the DAX have declined as well, 1.4% for the German markets, UK FTSE down another percent, S&P 500, Nasdaq 100 fell over 4%. So, and obviously cryptocurrencies, Bitcoin, ETH, etc., are down as well, as we had reported on that. The key takeaway before I get into some additional data is the tariffs have exceeded all expectations. JP Morgan's Michael Ferroli said that based on some static calculations that they have been running, the US could generate nearly $400 billion in taxes. That would make it the most significant tax increase relative to GDP since the 1969 Revenue Act. And looking at inflation numbers, they project that these tariff measures could elevate inflation by another 1 to 1.5% and basically raise the average effective tariff rate from a global perspective to 23%, which would be the highest level in the last century. That is it on a headline level. I have some additional bits and pieces to get into because, as you said at the start of the show, depending on the industry, you said BTC has been ranging for a while, but for some industries, this is really significant. And I want to take a look at Nike because Wall Street, obviously, both companies, investors, they have been reacting strongly to that. And for Nike specifically, they said the stock is uninvestable now because, like many apparel brands, sportswear brands, shoe manufacturers, they do manufacture in countries like Vietnam, in China, et cetera, which have some of the highest tariff rates from that. And for that reason, the analysts went as far to say that those companies right now are uninvestable. There's no sensible way to buy this stock right now, and the market has been reacting to that quite strongly. Taking a look at Nike, that is down 9.5%, almost 10% on the pre-market. So it's not only the case that the overall stock market is down, that crypto is down, it's also the case that you have industries that are very strongly affected by that. And also, like from that Financial Times article, which has reported on quite some good data, that they went as far to say they renamed it. It's not Liberation Day, it's Libation Day, because after those announcements, you really need a drink to process what is going on.